too many times I feel like there's transactions that happened where they're just wanting to close their purchase.
Like force it through. Like
Yeah.
everybody, the agents or the
Yeah.
lenders, everyone's just trying to
Everybody's
push
saying
it
we
to get
need
it done.
this insured now.
Welcome to Your Marana. I'm your host, Liz J. I come on here to answer real questions from buyers and sellers, share local Marana area insights, and bring in trusted experts to help you better understand the home buying, selling, and homeownership journeys. No gatekeeping, no sales pitch, just the information you need to make confident decisions. Let's get started. Jen, tell me who you are and what you do.
I'm Jennifer Sevillano. I'm an insurance agent for Comparion Insurance.
Okay.
So I'm technically an insurance broker. I have access to over 40 companies.
Awesome.
That I can shop a lot of the personal lines of coverage like auto, home, life, and then some of the small business, small commercial.
Awesome. So when as a consumer, when I'm looking for an insurance agent and you have access to that many products, do all the insurance agents out there have access to that many products, or is that kind of a unique thing?
It depends on the company.
Okay.
Some of like your big names are captured agents, which means they mostly do business just with that company.
Okay.
And then the brokers are where you get access to a little bit more of the companies, and it'll vary as far as how many they really have access to. It just depends on their appointments.
Okay. So the big blue company with the lizard, it's kind of different than that, right?
Yeah.
Okay.
Yeah.
I'm going to ask you some questions today that pertain to first-time home buyers. When you buy your first home, it can be very daunting, and the process has so many different moving parts. And you being an insurance agent, what I want the viewers to take away from this is to see how important homeowners insurance is, how it works, and how it plays a huge role in a real estate transaction.
Mm-hmm.
So my first question for you is, for someone who is buying their first home, what does homeowners insurance typically cover, and what are some common things that people are surprised are not covered?
Okay, so your basic policy,
Mm-hmm.
obviously some things are going to vary with companies, but your basic coverage is always going to be your dwelling, which is what covers the home itself.
Like
so
the walls, the roof.
Mm-hmm.
What about like if I need a new roof?
So the roof is included on your dwelling. So it's part of that coverage.
Okay.
And I mean, obviously, which we'll probably get into that, but there's exclusions of what we would cover. You know what I mean?
Okay.
So, but the coverage itself, the idea is like your dwelling, and then you have detached or separate structures. So anything
like sheds.
Exactly.
Okay.
Yeah, your
Workshops,
pool.
Yeah. Oh, your pool. Okay.
Mm-hmm.
Okay.
Yeah, that's separate structure. So as long as it's not attached like through the roof or sharing a wall with that main home, then it's detached structures, separate structures.
Okay.
Yeah, and then you'll have your personal property. So all of your contents.
Like my clothes and my computer, my desk, all my furniture.
Yep.
My fridge and all that good stuff.
Yep. So all of your stuff.
Okay.
Basically, the way I like to tell clients is think about everything that you're going to bring with you when you move into that new home.
Okay.
That's what falls under your contents or your personal property.
Got it.
And then there's some liability coverage.
Okay.
So if you're found responsible for the injuries to other people or their stuff, that kicks in.
So like if a little kid decides to come into my yard and they trip over one of my planters and they break their arm.
Yeah. And so this liability, homes with pools, it's so important.
Okay.
Because that's going to be one of your biggest liabilities. If a little kid jumps the fence and they go into your pool and something happens to them, your liability kicks in.
Okay.
So this is one of those coverages that, in my opinion, can sometimes get overlooked, especially on a new purchase, because they're thinking, I mean, this is not about my structure. This isn't about my loan. Your bank doesn't care about your liability limit.
Oh, okay. That's a good point. I didn't think about that.
So they're just trying to keep price low, and I find that sometimes it's one of those coverages that goes first. If you're not doing like a detail review on it. Yeah.
And even so, like with pools, as a realtor, there's with home inspections, swimming pools have certain barrier protections. There's certain documents that clients have to sign to understand the importance of protecting the pool from people who may wander in.
Yeah.
So because there's those safety latches like on slider doors or on gates outside, those help to protect the people from potentially harming themselves, but still that liability insurance is there in that event where someone does get injured. Gotcha. Okay.
And then the other like main coverage there would be your loss of use. So if you do have a claim and you're not able to reside in your home due to that covered claim, you have to rent a hotel, an apartment for 6 months while the company is doing repairs. This helps cover some of those increased costs of living.
Okay.
Yeah. And as far as like exactly like how the coverage applies, like what it covers, and obviously I have to say like check your company because every company is a little bit different. There will be exclusions or endorsements that you can add to make sure there's coverage on there.
An endorsement is like an additional, is it like a rider, like something extra?
Yes.
Okay.
Yes,
I always like to call them riders because I feel like it's like a hitchhiker. Like it's like a little, the little hitchhikers. It's like a Toya in the desert. Like
it just tacks on.
It just tacks on.
Yeah. Okay. Yeah. So check that because that can completely transform your policy.
Okay.
Or each company, again, their contract is just different.
Gotcha.
The coverage might vary.
It's just like car insurance. Like you call different companies and they have different ways of explaining things and covering things, and it just works differently because they're all their own like thing, really.
Yeah.
Like, they all have control of the design of their coverages.
Yeah, but most companies are going to carry like your common perils like fire, theft,
flood or water. Not flood, but
not flood. So wind
or hail. Big one here.
Wind or hail with our monsoons. Yeah.
Now what about solar panels? Like if the solar panels get damaged,
need to be included. So that's one thing that sometimes people don't think about. So because they're attached to your home, they become part of your dwelling. Okay. So they're covered on that main big number usually that you see on your coverage. But if they're not included, your dwelling might not be accounting for the value of them. Yeah. So let's say you have a complete total loss and we don't have the panels included, then we're going to be short however many thousands.
Wow.
You know what I mean?
That's a great point. Wow.
Yeah.
And like when a lot of homes that I go in with first-time homebuyers especially, my number one question is how old is the roof and the AC? And I want to talk about the roof. So some of these homes, the owners have deferred maintenance on the roof and the roof needs to essentially be replaced. It's about 20 to 30 years old. They've done minimal to no maintenance on it and the sun has just beaten it down. And the buyers will go to get insurance sometimes and the insurance company or agent, just like you, will say, the roof, if it's X years old, it's like not gonna, like we're not gonna insure the home.
Yeah. So there's two things can happen. I know there's companies that would just say, no, we're not gonna take it because the roof is not in good condition or it's too old. There's some companies out there that will just exclude the roof. Yeah. So I go back to always check your declarations page because it just depends on how it was written in the conversation that you had with the agent.
Yeah.
Which connects to the other part of your question, which I think what's not covered. So flood is not covered.
You have to have a rider.
Yeah, either. So it's rare when you can add it as an endorsement or a rider on the policy. Okay. A lot of the times it's on separate policy.
Okay.
Yeah. Flood and then, maintenance, wear and tear.
Yeah.
So same thing as your car. Like your home insurance policy is not here to maintain your home.
Right. It's there in catastrophic events.
Exactly.
How do insurance companies determine how much coverage a homeowner needs and how can someone make sure they're not underinsured?
So we use what we call replacement cost estimators. They're tools that every company, as far as I've ever known, uses to calculate the value of the home.
It's like a fancy calculator?
Yeah. Yeah, so you enter age of the home, square footage of the home, building materials, so like your walls, your roof, roof type, your bathrooms and kitchens, like the grade, whether they're standard build or builder grade, or if they have granite, all that stuff. So things that would give us what it would cost to rebuild your home. So when we're looking at it, we want to know what your rebuild value is, which is very different than your market sale purchase price, as you know, because there's just different factors that go into your market.
Materials, and the materials can change over time too.
Exactly.
So it's kind of like a fancy calculator, and you put in like all of the characteristics of the home, as you said, and then from there you're able to kind of give a number to the client. You're able to say, you know, it's estimated this, you know, for your home, but then like they need to kind of choose on their contents, right? Like their own personal things.
Yeah. So that's the one. Most policies, like they work off percentages usually. Like your contents will be a percentage of your dwelling.
Yes, I've seen that.
Yeah.
Like 20, is it like 25%?
I think it starts at 10.
10%. Okay.
Yeah, and then you can go up from there depending on the company again.
Like if you have like all your furniture is from Lazy Boy.
Exactly. No.
Or Ethan Allen versus you got your furniture at IKEA and you built it yourself.
Okay. No, absolutely. Okay. And well, going back to how do we know what the value would be, I think from the client's perspective, be honest. Like this is, I think your home policies where you don't want to try to be subtle about like, I mean, it's just a small little home, like nothing. Because when a claim happens, let's say we go back to worst case scenario, it's a total loss. The company needs to be able to rebuild your home to the same kind and quality that you have now. If you have customizations to your home and you have those granite countertops, if you have just beautiful tile everywhere instead of just
drywall, or
like,
regular tile,
like it matters because we want to give you that home back. Like they need to be able to rebuild it to exactly your home now, not just builder grade.
They really want to make sure to put the homeowner back as close to whole again as possible.
Yes.
Instead of saying, oh yeah, you know, I suffered this horrible tragedy where I've lost my home and I get to rebuild it and I choose these finishes, but I used to have granite countertops, but now I only get to have Formica.
Yeah. You have for it now.
That would suck.
Yeah.
So next question, should homeowners have their replacement costs and coverage limits reviewed annually? And to second that, have you seen any situations where people discovered a loss and they didn't have enough coverage to rebuild their home?
So yes and no. Yes. I mean, you want to, if it's feasible yearly, yes, do it. It does not hurt.
Okay.
You know what I mean? The reason why is, well, I guess you shouldn't wait until the annual review if you are making changes and upgrades to your home.
Okay.
You know what I mean?
That's a great point.
Yeah. Let your agent know.
Yeah.
If you added a pool that you didn't have when you first purchased it, it probably, your other structures coverage does not account for the price of the pool. Because what do pools run now?
I think you can maybe get away with 50 grand, but it's usually closer to 100 grand.
Yeah, so 50 to 100 grand, it's a huge difference on other structures. Let's say you bought a house, there's nothing but dirt back there, and you're like, I have nothing. So you just get 10% on detached structures. So you get, I don't know, depending on the house, $20,000. Now you put in a whole new pool, and you have a, you know what I mean, a whole oasis back there.
Yeah.
You have a claim, you never told your insurance company. There's no way for us to cover that. Okay. Same thing with your home. Like if you added a whole room, if you added a bathroom, if you did a full bathroom upgrade with, we go back to those upgraded finishes, upgraded flooring, new beautiful tub.
And light fixtures too. Yeah. Like there's some pretty expensive ceiling fans out there, pendant lighting. You can go down to the details on that.
Yeah. Okay. So if you bought a home, you, over the past 5 years, you completely redid it and you spent however many hundreds of thousands of dollars probably at that point. You never told your agent. You know what I mean? Like, and you have a claim. There's no way of us knowing unless you tell us.
That's true.
That's why, yes, review it yearly. It would be extremely helpful, but you don't have to do it yearly on the dot if you're just keeping them informed as they go.
Gotcha.
And I have seen it. I mean, personally, I haven't seen a specific claim where that happened, but I know, I'm like, just to share a story, there's one of my husband's friends had an existing policy with a agency that I used to work for. And that policy was there since before I worked there. I had no idea that's where it was. And once he told me who it was with and we figured like it was with us, I pulled it up. When he bought his home, it was like his starter home with the goal of always building it and adding to it. He had added so many square footage. like this home is twice the size than it was when he built it.
Wow.
And the policy has just been sitting there. So the positive thing about most policies, they have like an inflation guard.
Okay.
So at renewal, most companies, again, I have to say, check with your policy, check with the company, because it can vary, but most of them nowadays do. So at renewal, the company will kind of adjust a certain percentage of your dwelling to keep up with inflation. So if we know materials are going up, you know what I mean? The company will try to keep up with that. But we, again, don't know what you did to your home. So his policy had more coverage than originally because of that inflation guard, but nothing to account for the massive home that he has now compared to what he had.
Gotcha.
Yeah.
So story that I had from a lead was he had a manufactured home that he paid. I think he said he paid it off, but well, he was close to paying it off or something. But he called me from a different state, and his home unfortunately had a fire. And it was uninhabitable, and he was living in an RV. And he said that his insurance company, when he filed the claim, the money that they were able to pay to help him was based on a policy that he purchased in the year like 1999 or 2000. And he never updated. He didn't know that he was supposed to update and a lot of things changed, like your market changes. The housing market went up and down several times between then and now. And cost of materials changing. And so he said that the payment that the insurance company was able to produce was like barely nothing. Like it was, it was nothing. And so it was a fraction. And he's been living in his RV and he doesn't know what to do. And so there's some charitable foundations out there that try to help in these situations, but it's more common of an issue than people realize.
Yeah.
Because it's just, you think, it's almost like car coverage. It's like, this is what I'm going to have for my car. And, do we renew our auto coverage really? We're not adding things. We're not improving things to our cars typically.
Yeah.
It's not very common. But for a house, we're always doing stuff to our house. And so in his case, I don't even think he did a lot of things. It was just purely the time that went by. And for whatever reason, the insurance company he had chosen years ago never updated anything, and it's legal for them to do that. It's
written in their contract. It all depends on how the policy's written. Also, I mean, it being a manufactured home can also be like another factor to it, because manufactured home policies and coverage and risks and availability and underwriting, all of it can be very different than your regular home.
And we're going to talk about that in a future episode.
But so that could be it.
Okay. But that's scary. It's really scary to think that you pour your life and your hard-earned money and your emotions, you raise your family in your home. And, so many pivotal things happen in your home. And like, just like that, something can happen. And the insurance that you thought you could rely on, you can't. So
I think an easy way to think about it, I was thinking right now, if you're doing anything to your home that's gonna fluctuate, increase your resale value, it's a good idea to just run it by your agent. I'm not saying that every single thing, you know what I mean, it's gonna change it, because again, your market value is different than your rebuild value, but typically they could kind of correlate. So just run it by your agent, and then they'll be able to kind of guide you from there.
So if I replace the faucet in my bathroom, I don't probably need to contact my agent. But if I build an extra room onto my house, it's probably a good idea.
Exactly.
Gotcha. Fourth question is, during a home purchase, buyers often request a CLUE report, CLUE report. What is it, and what can it tell us about a property's insurance history?
So I Googled exactly what a CLUE report was. I'm full disclosure. Well, I know what it is, but I guess what the acronym stands for.
Yes, because in real estate, they teach us CLUE report, but in your industry, you use a completely different term. Because I've asked for it many times on behalf of my clients. What is that? And I'm like, it's a history. It's a 5-year history.
So, I mean, I've known it as a CLUE report, but it's a comprehensive loss underwriting exchange.
Yes.
It's a claim history report.
That's what I call it. It's a claim history report.
It typically it's for 5 years, I believe, is what most is it the lenders or the realtors that want it?
So we want it I don't think the lender wants it. It's
The
just
realtors,
it's
yeah.
us. It's a part of our due diligence period.
Okay.
It's actually written in the purchase contract that the seller must provide it, or both parties have to agree that the seller cannot produce one for whatever reason. So essentially, it helps the buyer to figure out if there have been major claims on the property and if the property is insurable. Because if there's certain claims on the property and they go to get insurance,
yeah,
sometimes the insurance company says no.
Yeah. So yeah, that's what it is. It's just it's a
Gotcha.
claim history.
So how, tell me, like, explain more what it looks like if a major claim happened on a home and a client calls you. They're like, hey, I'm going to buy 123 Banana Street, dot dot dot. what you know, and let's assume that that home has like a claim on it. What type of claim usually is like really bad that's the insurance company's going to be like, oh no, we don't want that?
So on the report, you'll see for the property the date of loss, a lot of times the type of loss.
Yep, I've seen it.
And the amount paid out sometimes too.
Yes.
Yeah. Honestly, so and as far as what's going to completely not let the insurance take it, it's going to vary by company.
Okay.
And another layer to that is that sometimes, depending on how you're trying to insure the property, whether it is going to be owner occupied or a rental, is how each company looks at the claim. So whether or not they'll still take it into account, because some companies will say it follows the owner. Some companies will say it follows the property. And that can vary depending on the company and depending on whether it's going to be a rental or owner occupied, etc.
Gotcha.
So that can vary. But then it's a good way, I think, for clients to see the history of the home, if there's any reoccurring issues.
Yeah.
It could show you some maintenance issues even, because if there's a constant water claims, then you might want to get a different type of inspection.
Yes.
So it gives you a history of the property that you're buying.
Gotcha. It's like another way to inspect the history of the property.
Yeah.
That the current owner may or may not remember. And it has to be like, they have to disclose everything. But as we know, sometimes people forget, or in the rare instance, sometimes they purposely withhold information.
Yeah.
So those claims history help us to investigate further.
Yeah, absolutely.
Yeah. So the fifth question is if a buyer is comparing two similar homes, are there insurance related factors that could make one a better financial decision than the other?
Yes.
Okay.
I think we go back to a lot of the things that we've touched on.
Okay.
Which is your replacement costs. So what we're actually how much it's gonna cost us to rebuild that home. Because let's say the exact same home, you know what I mean, that you're buying in one area of town is going to be a completely different price in the other area of town. We're still looking at your rebuild value.
Yes, because you use that fancy calculator.
Yeah. So for us, if it is the exact same home, it should be the same value of the home. You know what I mean? But it's a completely different price for the person buying it. So, and vice versa. So your same $150,000 home, which we can't find anymore, but
right, yeah.
Your same $150,000 home, if it's 10 years older or 20 years older compared to now, that's a different risk to insure. If it's a brick home compared to a regular wood and stuccoed home, completely different risk.
Gotcha.
What else? Claim history. We go back to that. If it's not a well-maintained home, it's a constant claim on it, completely different risk and price because you add surcharges and all of that.
Got it.
So yes, the similar price home, completely different homes.
Yep.
Also the area of town, so zip codes, which I don't even think we had talked about. Zip codes, a lot of the rates are zip code based.
Oh,
they can be.
And that's crazy because
amongst everything.
Tucson and Marana, like our zip codes are we have some tiny little zip codes, but then we have some massive zip codes where a mountain goes in between the middle of it. And then you have like one type of neighborhood here, and then you have a completely different type of, like, you have a 55 plus neighborhood on this side that's mostly manufactured homes, like to the Tucson mountains.
Yeah.
So you have like Tucson Estates on this side, and then you have like by a mountain on the other.
Yeah, so your area where you're at can affect your risk.
Your rate, yeah.
Yeah, your rate.
Okay.
So if we're seeing And same thing goes for like your car insurance. If we're seeing in that zip code an increase in claims for this type of claim, like that can inflate
like fire.
I was about to say fire risk.
Yeah, because fire risk is huge here. It's like way bigger than what I think a lot of people realize.
Yeah.
Because like, yes, we're a dry desert and we don't have a lot of trees, but the desert burns really fast.
So that's another thing about like it being insurable or not. So I've seen some companies, they literally rate them like low, medium, high fire risk. So, or some companies will not insure specific areas or zip codes because it's a fire risk.
Gotcha.
Same price home, but you might have a really hard time finding insurance for it because it's a high fire risk, and some companies are just not messing with it.
Gotcha.
And then if same price home and then low fire risk, cheap, high fire risk, it's going to be expensive. Your insurance is going to be expensive, and then it bleeds into everything else.
Yeah. And, you know, it makes a lot of sense why in the beginning of a purchase of a home, during the inspection period, also known as the due diligence period, one of the very first things that is not only on every single document that I have to remind myself, but it's just in my mind now at this point, is I tell my client before we even go to inspections physically on the home, call your insurance agent and make sure you can insure the home. Yeah. And they think that it's like so silly that I'm saying that, but I'm like, no, you have to do it.
Yeah.
You just have to, because you just don't know.
No, and it's honestly, it's so good that you do that, because before I started working in the industry and looked at like shopping around for my home and everything, like that was the first thing I would do. I was like, how much would it be to insure this home? And the way it varies, and I mean, I'm still shopping within my like budget, but the insurance rate completely different. Like we go back to the fire risk, but how close you are to a fire hydrant can affect it.
Oh wow.
Whether or not there is a responding fire department within a specific distance.
There are some areas in Marana that do not have fire department
fire
service.
Subscriptions. Those are huge for some companies. You have to be subscribed in order for them to insure you.
Yeah.
Or if you are subscribed, you'll get a cheaper rate. So many factors.
So if there's one thing that you want the viewers to take away from today's discussion, what one thing would you want them to remember out of all the things we've discussed today?
I think specifically for like first-time home buyers is do a full review of the quote and what you're going to end up getting for it.
Okay.
Do not treat it as just a little inconvenience requirement.
Got it.
That the loan is asking for, because again, it's going to protect your investment there
and your belongings,
all of it.
Gotcha.
Your liability, everything.
Yeah.
And too many times I feel like there's transactions that happened where they're just wanting to close their purchase,
like force it through, like everybody, the agents or the lenders, everyone's just trying to
everybody's saying
push it
we
to get it done.
This insured now. No, you want it to fit you and your needs and your lifestyle, all of it.
Yes.
Because we're not just trying to appease the bank.
Right.
We want to protect your home.
Yes.
Homeowners insurance.
Yes.
And then just be open and honest about it. That way you're getting a real quote, a real number with what your needs are, all of it.
Thank you so much.
Okay.
We're going to talk about more good stuff next time.
Sounds good.
So I'll see you next time.
Sounds good. Thank you.
All right. Craving more insider information and local insights for the Marana area? Subscribe to my channel and hit the notification bell so you never miss a single episode. If you're looking to relocate to Southern Arizona, buy your next home, or sell your current one, click the link in the description below to text with me directly.